Does that make sense? I see some smiles going, dang, I can use this right now. Right? So you have full flexibility in this model to do what you're doing, especially once you've done it with your attorney, you got your private placement, all that's in place. Any questions so far?
You can go limited amounts of these,
506 with, well, yes. Yes and no. If you have unaccredited investors, you're limited. You have certain timelines because you want to avoid you doing a massive fund with people that are not qualified. Okay? There's a whole rabbit hole I can go in here for. It's sick, this stuff you do. So we'll talk afterwards if you want, but it's crazy. All right, so this gives you the ability to run $10 million. But what we haven't talked about is this right here. What happens with this? All right? Anybody want to know? Yes. It goes to my pocket. All right, so I'm going to show you kind of what this does. So, again, we have a total of $10 million. All right, we have a total of $10 million. You already see what the investors getting paid, right? They're getting paid the percentages of their profits, plus they're getting a cumulative preferred return. So here's how we do it. That 10%, which is $1 million, is going to go to the actual management side. So what we're doing is in shares, and then we have co-sponsor. Shares, okay? So I'm going to kind of show you what that is. In ownership, what we do is we take this 10% in shares, and we break it into half for the sponsor or sponsors that are going to be involved in helping raise the capital. The reason why that's crucial, why do I give somebody equity? Because according to the law, you cannot pay somebody a commission for raising money, unless if they are an owner of that company. So what our attorneys have helped us do is put together an allocation of equity in the company that will be paid to the individual who raises the money. Does that make sense? And it's all in proportion with the amount of money being raised. I can show you that platform later, if you guys are interested in kind of getting a little bit more depth. But the whole point here is going to give you the basics, all right? Now, if you take that, that means that $500,000 will be allocated towards the operation of this business. Okay, so we have the shares for unaccredited management, right? And then we have this sponsor, right? So we would immediately allocate $500,000 to pay for the attorney fees, all the costs associated with actually running this private placement, and also running the operation, so acquiring the assets that we're buying, commercial, residential, whatever. Okay. However, we've allocated $500,000 in paying somebody for bringing the money. You guys with me? So now, here's what's really cool for the sponsor. If a sponsor brings an investor, he gets a number of shares. Now, anybody know how to calculate the number of shares there? Good. No, that's, yeah, 25,000 a share. We have $10 million, right? Which is a total of 400. So, and that gives you $25,000 per share. That's what you're looking for, right? But now what we're looking for is, of the 400 shares, 10% is what? 40. So we have 40 shares, which means that the sponsor can gain up to how many shares? 1. So, the sponsor can make, number one, up to 20 shares.